down yet, and I'm expecting that to happen. Last time I was in Australia, I think that the Australian dollar was around 108, so I'd rather be there now. I was blown away. I think a beer there was like $10 last time I was there in some of the pubs down there. So, again, the inflection points on the Aussie dollar, 87.19 on the weekly unfair lows. You've got a new box that's appeared here. This is something I'm really, really looking at, 92.24 on top. But let's kind of drill down into something possibly a little more appropriate on this. Unfair highs sitting at around 87.84 rounded off. Excuse me. Let me pull that up again. Sitting at around 88.07. Sorry about that. I was looking at the wrong number. Unfair lows are at 86.921. So we're kind of, doing, in my opinion, doing that gathering motion with not a lot of conflicting information below in any time frame for a possible new run down into 86.92 and possibly even lower, and basically hitting a ton of stops on the Australian dollar. So a couple of things, IBM got killed yesterday. We all know that. Really, I've been a fan of IBM going down for quite a while, and I know Tom O'Brien is kind of in that same camp. And, I'm from around Raleigh, North Carolina. They got a huge, huge headquarters there, and, they've been scaling down. They've been doing a lot of things to try to keep the stock price up, scaling down their workforce. Like, while I was living in Raleigh for a 2-year stretch, I think they had, in that time frame, exported about 40,000 jobs over to India. They have done some innovative conceptual things on stock buybacks, dividends, you name it. But the company itself really, is... they're killing middle management. They're getting rid of that. They're just trying to do anything they can to keep the stock price up. And I think there's some, even though we've got a big gap down, there's nothing down here to key off of to trade this thing right now. The 60-minute, here's what this is. The bands are, just to give you something to hang on to, around 167.15 and up top around 173 even. But I think this stock possibly could head a little lower, and that's the inflection points to pay attention to on breakdowns or rallies up to sell rallies, in my opinion. I think there's some tough times ahead for this company. But all we can do is generally look at it, and this is kind of what I wanted to bring out. We talked about 192.50 really never more than likely going above there when we were back in this area back in, 1st of September, whatever. We poked our head up, then came down. Then we've kind of been using profiles to regulate this trade from the short side. It showed some serious weakness relative to the market ahead of time. There's the September 19th highs of the S&Ps. It wasn't looking extremely high beta type relative strength situation versus the market, and lo and behold, we're trading well below profiles now. So those are the 60-minute profiles. I'm still relatively bearish on IBM in general. Let's take a look at Apple really quick. This is, there's a couple of earnings coming out today. We want to pay attention to those. Apple, 102.23. Here's the situation on Apple. Here's the weekly view, and we've obviously stayed a strong stock in a relative weak market. I was hoping that this thing would give it up at some point and kind of give the market that extra momentum down because of our market breadth statistics were, and still on a long-term basis, they're still relatively weak. So, Apple would have obviously pushed a lot of that, S&P moving even farther over the cliff, but the unfair high is 97.48 on the weekly. And we were kind of looking at that as 97.48 combined with 97.66. And when we got our head back above there, it was not okay to be short at that point. So, right now we're trading, what was the last print on that? 102.23. So, again, we've got a new daily profile. It's relatively wide, signifying pretty high volatility. I'm kind of a fan of sticking with our market breadth statistics and still trying to find inflection points on the index to sell off. So I don't know if Apple's going to go too much higher. We've got a resistance point is sitting at pre-market right now. The market's been up huge. I'm going to pull up the S&Ps really quick. Where are they at? Here we go. And we've kind of been bouncing all over the place since last night. As we wait for this to come up. Come on, guys. Here we go. Here's the 60-minute chart. I mean, we've been as low as 1887. We've been as high as 1917, 16 general neighborhood. So, we're talking about a 30-point rally in the last 1, 2, 3, 4, 5, 6 hours. Actually, it happened in 4 hours, in a 4-hour time slot. And then in the last 2 hours, we've kind of been dangling down below. So pretty good move up. I'm going to show you the market breadth statistics really quick. And again, these weeklies have been showing that relative, okay to be short, not okay to be long on a long-term basis. The dailies have crossed over recently. The weeklies are basically the best barometer for me. And what I'm looking at is trying to find areas to pick battles still on the short side. And, we were going to have these relief pops. There's no question about that. But as we, have those, where are the odds? Where's the edge? We're right in the middle of a big daily profile sitting with not a lot of, there's a lot of air around this thing right now. And that all-important 1933, that breaking point, break below, go and retest is sitting up there just a little bit higher, along with the current profile unfair high 1937. So, excuse me. Here's the 240. We've short-term basis. We've kind of been climbing 1887, that last bounce point. And I'm not trying to be a Monday morning quarterback. I'm trying to get to my point here in a second. I'm still a big fan of looking for longer-term inflection points that appear to try to, use this as something to lean on from the short side. And a lot of these stocks have rallied pretty significantly. In fact, we've had over 100-point S&P rally in the last, 4 days already. So, we've bounced relatively good. I think we were down 10%. Now we're doing about a 5% retracement, ballpark figures. So, take that for what it's worth. Got a couple of things this morning coming out: Coca-Cola, McDonald's, Verizon, Lockheed Martin. We're going to take a look at those really, really quick. Coca-Cola. And as we look at Coca-Cola, not really, good news for long-term Coke investors. Here's the situation on Coke. We really didn't get that bounce from Coke, as, obviously it was a strong stock, but this recent bounce, it was, a little bit of a worry situation there. Unfair highs at 44.65. Wait a minute, hold on. Excuse me. Unfair lows at 43.32, and we just come unglued a little bit off of there. So here's the way it looks if you don't have a chart up of your own. Looking relatively bearish, and came right off that inflection point that it tried to close above but stayed below. So relatively bearish news on Coke. I'd probably stay away from it on the long side right now until we get some new information up here to key off of that. Here's McDonald's. Not as bad as Coca-Cola. Definitely selling off. Not the greatest chart pattern you like to see, but it's kind of cool. Similar situation to Coke, hitting an inflection point near the close yesterday, coming off. The only thing I see in McDonald's really that's a little concerning to just lay the wood to the short side is we've had lower lows on price action and higher lows on Navigator here, almost in a opposite trend type situation. So, McDonald's could be kind of forming a bottom here within this profile. Keep your eye on it. If he wants to stay within this profile, I'd watch out trying to short this at this stage, but it is relatively weak in a very, strong market bounce, and had really been showing some weakness, as you can see over the, since back in June, actually. So again, you got two things going on with McDonald's. You got relative weakness versus the marketplace, and you've also got a divergence showing that we may be trying to find a bottom down here. So again, McDonald's is kind of giving me mixed signals. I'm not a big fan of trading something like that. I want to see a lot of confirmations in the same slant, and hopefully I can increase the probabilities by doing something like that. So last thing we're going to take a look at before break here is Lockheed Martin. I used to love trading the stock back in the day. Not good there either. So inflection points to pay attention to on the daily: 172.62, 177.34. I think we're trading right at 172.62 right now. I'm trading 172 actually pre-market. So those inflection points are something we're going to have to pay attention to on Lockheed Martin. As we go to break, just want to let you know we're going to bring up a friend of mine from Wall Street, Eric Courtney. We're going to have him on in just a little bit after the first break. And we're going to talk a little bit of fundamentals, some things about China, and a couple of things that he will be bringing to the table. So come back and see us in just a little bit. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I hear we're having some technical problems trying to get Eric on. Eric, if you're there, call their Skype 2 address, and Al, maybe you could do the same from your Skype 2 address, and we'll get Eric on as soon as we can. All right, so let's take a look at some of the usual suspects on this particular segment. We got about 5 minutes here. We're going to breeze through these pretty quickly here. A lot of earnings stocks coming out today. I want to cover as many of those as I can just to give you some things to lean on. Euro, again, let me just pull this up here. Again, the weekly got a new box appeared, 125.74 down below, 130.19 above. Let's take a look at the daily. And the situation here got a new box. Talked about this yesterday. Unfair highs were going to be the limiting factor on a new box. That we knew this morning or before the euro started climbing today. Unfair highs around 128.30, rounded off. Then we've got that kind of situation down below, 127.36 still. I'm a big fan of staying short the euro on inflection points as we see them. We talked about yesterday this was a classical kind of longish continuation pattern using that unfair highs leverage, but now that we got a new profile, we got to pay attention to those inflection points previously. But right now, guys, I think we're going to explore this entire fair auction down below, and that unfair low, 126.34 rounded off, and I wouldn't have, kind of been flip-flopping like this. I told you I was opting out on longs on the euro still, even though we had that classical technical analysis pattern, waiting for a new inflection point, trying to get on the short bandwagon once again. So that's the numbers to be aware of on the euro. We've talked about the Australian dollar. I want to look at the yen really quick. This kind of is an interesting situation to me, and I'll just review this on the weekly here. Try to pick a battle around 107.07, 106.20 something, and then 105.44 from the long side. So remember, the theme is lose a little, lose a little, lose a little, make a lot. So let me tell somebody something really quick about trying to get Eric on. Getting frustrated here. 106.14 unfair highs on the weekly after we had bounced from that lose a little, make a lot trade, 105.44 up into 107.40, about 200 pips. We've got to look for new support areas on the yen, in my opinion. Those unfair highs on the yen weekly, 106.14. I'm still a big fan of putting stops below there and trying to let this thing climb again and retesting the highs. Here's the situation on the daily. 105.91 sitting here, 106.14. We've reached the low already. Let's see, 106.25. So, this DMZ we talked about between these two inflection points, talked about yesterday. Still a big fan of putting stops below that DMZ and just seeing what the yen will do. The yen been very, very good to me. So, a lot of things going on here this morning. Let's get away from the yen. If you don't remember Garrett Morris on Saturday Night Live, that was a tribute to Garrett Morris. All right, here we go. Let's take a look at the dollar. And as we look at the dollar, again, I'm not a fan of going short the dollar. A lot of folks out there, a lot of news stories you might have read, or the dollar may relax. I'm a big fan of going long the dollar and going long the dollar on a close above 85.40. That hasn't happened. We've been kind of mulling around down here, but this is not the kind of action you want to see from the long side, but if we can pop our head back up above at least that inflection point, it'll give me a inflection point to hopefully be aware of here that I can place stops around and hopefully shoot for those unfair highs again, 86, 14, 15, just like we did last week, and maybe go a little bit higher. So that's kind of the way I'm looking at the dollar, not from the short side, from the long side. Okay. As we move down into the NASDAQ, we talked a little bit about the S&Ps. As we look at the NASDAQ, and as we can see, we were kind of hoping that we would get up to this inflection point. We've gotten there. All right. That's awesome, 39.02. And now we can have something to lean on from the short side, in my opinion. I think this market's going to relax a little bit in general. I'm basing that on some things that I'm looking at, and I'm trying to eliminate the long side right now. We'll be right back, folks. Hopefully we can grab Eric, technically speaking, before the end of the show here. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The diagnostic box spread analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the diagnostic box spread analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. I think we're still having some problems trying to get Eric on here, so we're going to move forward. And moving forward means we're going to take a look at Google. And as we pull that up, I just want to show you, how Google's kind of used an inflection point down here around 519 weekly. That was kind of Custer's last stance here for it to try to bounce. And as we look at the daily, there was really nothing down here to look at, but the weekly, remember, takes precedence over the daily most of the time, so that just trying to look and see if we're going to get Eric here. So that weekly is going to be maximum leverage area that you can place stops around, and that's kind of the situation on Google. We're trading 535 pre-market, and that bounce was at 519. So just waiting patiently was really the name of the game, because you had nothing to key off here on the daily. A little bit of an education here, and nothing to key off on the weekly, but until we got down to that very ripe Maginot line, if you will, on Google in general. So okay, Eric's connection is unstable. I'm aware of that, so we'll move forward. Tell you what, some of these, I don't know if you guys have been looking into, I'm a little bit more in tune with the Forex market than most folks, because my partner in Spain and Eddie that was spending a lot of time in Moscow recently, that we had on from Moscow. He had a really good trip. Forex markets, a lot of fines coming out on that from the U.S. Justice Department. Talking about upwards of $41-42 billion in fines. But they've already let one bank pretty much off the hook. And the reason they let him off the hook is because they cooperated. If I had just, I don't think I'm mincing words here. If I had just scammed a bunch of my banking customers and clientele out of $30 billion, let's just say, and I knew if I cooperated and kind of showed them what I did, I'd maybe get to keep the money. This is the kind of stuff that I didn't even think they even let this happen like this anymore. But that's what I'm reading, and I'm kind of shocked. Front running is definitely not allowed, and it's illegal. And it's like the guys in the pit looking at the phones and getting the order ahead of time, and then leaving that on the side. I'm sure you guys already know this. I'm sorry to bore you to death. And then trading ahead of the order. That's just amazing. And they're already let one big bank off the hook for so-called cooperating. It really, really hit me the wrong way when I was looking into that. Forex is tough enough sometimes, and to know that somebody else had a massive edge ahead of you, and on top of that is astonishing. So just wanted to get your thoughts on that. If you guys have any comments, please call in. Here's the situation on Amazon. We haven't looked at that in a while. And, we've kind of been noting that as a relative weak stock. and I want to show you why. I mean, this thing showed its hand a little bit early, but we've got a new profile here on Amazon. And $299, let's just call it 300, unfair lows, unfair highs 321. That big number up above was 327 that we were keying off of. But now that you've got a new profile, I don't really see any divergences here. So that may be. Okay, I've been told I'm going to be losing the connection at any moment to TFNN. I've got a great connection right now, so I don't know what's going on down there. $299, let's just call it 300 unfair lows on Amazon, and I'm actually looking for this to eclipse those lows. So I'm looking at breakouts below here, and I'm also looking at that because there's no conflicting information. And thirdly, the S&Ps have bounced quite a bit, and this thing's just kind of hanging around the lows, so to speak. So, I'm from a relative strength standpoint, I'm not very impressed with Amazon possibly exploring the fair auction up top, even though we're trading 308 pre-market. 300 down below could be a foregone conclusion for this to travel even lower. Let's take a look at gold. Okay, let's leave Eric alone, and I'll just move on, and we'll just leave the comments. Let's see here, gold. Here we go. Talked about yesterday using, we used 1227 as a fence, close above, retest, move higher. Talked about yesterday using the new fence, 1241, for this to move higher, because I personally wasn't a big fan of letting gold go against, me or the crowd 20 points before I started thinking about stops. If we go down below 1241, them's the breaks, and we can always re-enter a little bit higher. There's, gold's obviously got some volatility. I'm looking at much higher numbers on this, maybe 20 points higher on gold, and just trying to stay with this. And now that we're pretty far above, eSignal's not giving me our information here on the boxes. Mike, is there any? Let me see here. Sit tight, guys. Let me see what we have here. Okay, we're not getting any intraday data right now, so we're just going to stick with the dailies and weeklies and talk about a little bit of a longer stance. What I was going to say on gold is if you can, to regulate this trade up, now that we're kind of clearing and getting a little far above these inflection points, 1241, I'd like to use the 240s, which we're not getting quite a bit of enough information there to build our profiles. Well, let's see, we may. Okay, here we go. I'm looking at the 240 boxes to hopefully regulate this up a little farther, and that 1245 now is going to be the stop area that I'm going to be looking at to let me know that I'm more than likely going to have a chance to re-enter this as we either cave in a little bit farther, get below 1241, and then rally back up, or just eclipse 1245 again, 1246 rounded off. So that's the situation on gold. And if you look at the 240s, it's regulated the trade relatively well. I've only got 80 bars back here on this 240 chart, so I'm not looking back any farther just to try to save bandwidth. Silver, I'm really hoping that we can break out of silver out of this band. It's just been kind of like watching paint dry a little bit here for silver. Gold's been rallying, silver hadn't. But if we can get a close, again, we've talked about this quite a bit, 1772 and a half. If we can get a close above there, that's going to change the tone of this altogether, because if you look back in time, this has been kind of trailing down relative to profiles for a while, and that would be so-called technical damage on silver in general. Okay. Now let's try to get into a couple other stocks that are going to be of note. UTX, I want to pull this up because this is a stock that was in the back of my brain for a while. And here we go. Here's a weekly situation. And, before the market cracked, here's July 7th. Remember, around July 25th, 6th, somewhere in there, is when the market cracked in general. And UTX had shown that relative weakness versus the market early. And I was actually talking about this quite a bit as one of the scanner choice picks that really just, it was sitting there like a teed up, ready for you to short it ahead of time, breaking long-term profiles, coming back, retesting bottom of the box profiles weekly. Just great trading opportunities, in my opinion, and has shown its hand very, very well over time after that breakdown of, being not a long candidate, so to speak. Pre-market, we're trading 103.75, so we're getting a little bit of a bounce. But it looks to me that, we're coming back up into another inflection point on the daily, possibly a selling point to pick a battle, that unfair high 103.01. So we're trading a little bit above their pre-market. But again, you got to kind of turn the rents the same way until you're told differently. UTX is in a downtrend. You may get stopped out of a trade like that, but you're trying to put the odds in your favor on situations like that, in my opinion. A couple of things I want to take a look at, and I'm going to pull up our scanner really quick. In times like this, and let me just check where the S&Ps are really quick for you. Okay. It's about 8:45. 1907. We're obviously strong. We've obviously moved up about 100 points in the S&Ps, a 5% approximate move up from the lows. And we want to try to look at things that aren't cooperating with this. We want to try to sell weak stocks and buy strong stocks. That's basically, in a nutshell, what we want to do. I've got the S&P 500 up here with no filters, no nothing, right? And if you've watched these shows, you know that what we're showing is weekly, daily, 240, and 60-minute profiles, chance to see those inflection points, whether the instrument is above or below profiles, within profiles, or showing a new box attempting to appear. So what we're going to do now is we're going to go in here, and this is something that, once I went this route, combined with some other things, you almost feel handicapped not going this route, trying to do relative strength trading. And what I mean by that is I'm going to try to find stocks that are not cooperating with this move. There's a number of ways to do that, and I'm just going to simply show stocks that are below the box on our daily. So that means stocks that are trading below profile still on our daily with that move up, and that means that on our daily, that would be 56 stocks, okay? Candidates. And we may have some differences this morning because this is an e-signal API running this, and pre-market, we're going to have some dailies change around here a little bit, but still gives you some really good ideas, if you will, that hopefully you can lean on during the trading day. And Hewlett-Packard, HPQ, let's just look at that situation. HPQ. And here we go. Pre-market 33.94. This is the weekly, below profiles. Kind of like this, even though it was kind of a strong stock in a strong market. This is our daily situation. We're sitting right at an unfair low on our daily. Got some leverage we can kind of manipulate off of here around 33.98. Let's just call it 34. I like this to try to pick a battle here. I think the market may pull back, and this stock really hasn't had the gold-plated move up with it. So we're going to take a look at a couple other things, a couple other actionable items, if you will, in my opinion. We're not going to look at Berkshire Hathaway because it's usually no, we're not going to look at that. We're going to take a look at Intel really, really quick, but we're kind of sitting at weekly unfair highs here. I don't think that's a good candidate, really, just by broadly looking at it. I want to take a look at Newmont Mining was the one I was looking at this morning. NEM. Okay, so as we pull this wrong symbol up, NEM, here we go. trading 23.11 pre-market. Does that got earnings on it? I don't think so. Eric, are you here? I hear that we have you. I'm just hearing myself echo right now, so maybe why don't you cut that line off really quick. Okay, so Newmont Mining, here's the situation on Newmont. Things on the lows go lower. Things on our highs go higher. That's just kind of what I've seen before, and I don't like the concept of these triple, double, whatever bottoms. It seems like there's a lot of people watching that, and a lot of times it'll do these whoosh moves down before we turn around, i.e. the U.S. dollar, when we were trading about 80.5 or 81, or then we went down to, well, let me show you that. Let me pull back up the dollar here. Here we go. Yep. If we go back on the dollar chart, let me go back to the daily here. Excuse me, folks. Yeah, we were kind of making these violent moves down back in, what was that? So back in May on the December contract. Yeah, I mean we eventually moved up, but before we moved up, we had that kind of stop out, catch all stops type move. That may happen on Newmont, but I want to talk about that when we get back. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Let's take a look at the DAX. Got about 4 minutes left here. Nothing new there. Not a big fan of trading the DAX from the long side. I think the U.S. markets may come off here, and the situation that we do have on the DAX, my God, we're having some issues this morning. Apologize for not being able to grab Eric. That's just the way the ball bounces sometimes on the technical side. 87.99, unfair highs, 240s. We bounced off the lows this morning already, 86.27. So that's the range, in my opinion. On the very short term on the DAX, but I think the situation is sell rallies on indices right now still, and make sure you put your stops in, folks. That's crucial and critical at the same time. I want to pull up the Nikkei. We talked about this earlier. Something I follow. A lot of people over here follow. We not get the intraday data again here. Hold on, guys. Can't look at that. Excuse me. Let's take a look at the treasuries. Oh, here we go. Okay. All right. Inflection points on the Nikkei. 14,536, 15,355. Predicting very wild prices in the Nikkei for the short term. So what does that mean? That means that if you're going to trade this thing, you got to drill down a little farther, and we're not getting our information on the 240s. Okay, so what we're going to do is we're going to move into the treasuries really quick before we end the show. I think we're going to have some success here. All right, so got a new box yesterday in the 10-year. Again, I'm not a big fan of selling treasuries, so I don't have anything to kind of lean on there. So what I'm going to do, the maximum support on the 10-year right now is going to be down at 126.08. It's a pretty good ways from here, about a whole handle down. And then you've got that weekly unfair high around 126.01. So you've got a little bit of a span there from 126 up into 126.08, that general neighborhood as a maximum buying opportunity. But here's the we're not seeing our information again on the short term. Let's just wait for 2 seconds here on the 10-year. And we're going to take a look at Yahoo really quick too. So here we go. All right, so here's the situation on the 10-year. We talked yesterday about a pretty thin profile here on the short term, spanning from 127.31, let's just call it 128, down to 127.15, let's just call it 127.5. So popped our head up. The daily, there's absolutely nothing to key off of near here whatsoever. So I'm a big fan of buying support on the 10-year, as you know. Those unfair lows, 127.5, and then I'm kind of basing this too on the markets, stock markets that is possibly having another kind of run, not to possibly even the bottom, but a pullback, so to speak, and that would hopefully elevate treasuries as a natural reaction. So I'm looking to buy treasuries, and that buy point on the short term right now is 127.5. All right. We're going to try to grab Eric for tomorrow. and we'll see if we have some luck with that. But you guys have a good day trading today. There's a couple of stocks yet that are going to come out with earnings this morning. I'll try to pull those up here as we go to break. Well, we're probably not having time for that. So you guys have a good day trading today. Steve Rhodes is next. Basil, David White, Tom O'Brien, Daryl Martin, Andy Hecht. You guys have a good day trading.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.